3, 2, 1. Okay. Man. So it's October 3rd, 2024. Market's about to open in about 12 minutes. I'm just chilling. It's non-farm payroll this week. So all we do is just study it. I just want to study the, probably be here till about 10:30. So I can study the opening range gap open and into a full hour. And then from there I can study the 9:50 to 10:10. So what do we got? Today's Thursday. We had news at 8:30. We got an orange folder at 9:45, and then we have one at 10 a.m. And then tomorrow, this is the one that's pretty wicked. But yeah, let me hide this right here just so we can have a little peek on the higher time frame. This is what you really want to get into. Just taking a look. So this imbalance right here has been pretty much worked to. There's a little area that's still not hit. So it, could potentially go there. Again, I don't really have an interest for this as far as like being super accurate. I just like to watch it, just to study it so you can see how these candles behave on days like today. So we start there. We see that the weekly candle, this is what you do, weekly candle, it's expanding lower. After these 3 weeks, price was high. We're in a new month. It's probably going to come down, keep drifting lower. Who knows? We don't know. We got to see, obviously, what tomorrow will do, because tomorrow can come all the way down here. It can do that. And I'll be recording that tomorrow. So here's what it looks like on a daily. Just observing. I have my drawings hidden. There's certain things. So up here, there was a volume imbalance there. And that got worked. Price came down, took out all these lows right here. And right now, this was Monday, Tuesday, Wednesday's candle. And this is the Thursday candle. And look at that. That looks pretty nice right there. That's probably going to get tagged. And right now, I'm going to have to just measure. It's going to get sloppy, but I just want to measure this wick. So it's working the upper quad of that wick right there. So it's working the upper area of it right there. That's where it's been sitting around. Hasn't came down to the midpoint of it. So that's cool. You see, run up, came down. Run up, came down. So the mindset is whoever went short from up top here came down, took out whoever was long going up here that didn't profit, because these people don't take profit. So they running up. This looks like an area where people might want to place their stop. So they boom, tagged them and just create these nice highs. Nice high. Came down, tagged that low by a little bit. So whoever didn't profit got smoked. So now the mindset is, all right, let's run it up. Let's take out whoever is in this area and fill in this imbalance. So they ran it up and then boom, dropped it and took out this low right here. But look what's left in place. You have to kind of step back and just notice. Look at this and look at this. Just that's nice. So whoever went short here, they'll put their stop somewhere around here. And then price comes down. This is like a sigh of relief. Ooh, whoever was short and this is going up, ooh, we're feeling good now. So they're like, oh, it's pulling back up. It's no big deal. It's gonna reject. Nah, it tagged it. Whoever had their shorts trailed here got tagged with this right here, with this Thursday candle from the 26th, and it worked inside here. Again, this is all ICT concepts, and it makes sense if you really start to look at this in this manner. So price goes up, comes down. So there's a lot of buy side up here because this buy side got taken. So now what can we expect? Look at this. Look at this. These areas right here. Look at this. Look at this. That draws my attention there. And this obviously draws my attention, which is the Tuesday low, the Wednesday low. So probably at the bell open, it's going to come down here and swipe that out. Boom. Working the upper quad. So it's not like out of the way for it to come the consequent encroachment of that wick right there. And then, you know, who knows what it does after that. But cool. That's on a daily. The 4 hour, I just like to peek at it. I like to get a nice little peek. Look at this right here again. All of this. And then like look how these three highs, three lows I mean, are just nice and like stacked. So can come down here, probably come up, work this, because look, they took that out. So they left that. You know. Hit the lower quad of this wick right here. And I don't want to put my drawings on because it gets crazy, and I know what I'm looking at. Those lines really don't bother me. So, you know, so 924. All right. Let's go down to the 1 hour. So here's what's going on the 1 hour. Boom. Got a message. Put this on silent. Try the font without the number. Okay. I'm working on a little. We'll get to that. I'll get to that later. Look at this right here. This draws my attention here. That looks nice right there. Looks like a nice area to target. So, and like I said, this area here, that draws my attention. These slanted lows, that's engineered. So now, look how price came, like from the overnight session, it's just been coming down. Went up, took the high, coming down. So we'll see what the open has for us. And, you know, we will see. There is a 15-minute. This was yesterday's price action right here. Price went up, took that, came down in this little area here, pushed up, hovered around here. And then in the Asian session, it just failed to go higher and then came down, took that low there, right here, 3 a.m. Little imbalance right there. Boop, boop. Go across, came down. So this is the London low right here. This 345 low, I've been keeping an eye on that. So I'm going to just keep that to myself. Right there, you see this looks nice. So they, boom, it ran back up. See how these things are left in place? So when you see a huge drop like that, boop, comes right back up, tags it. Yeah, about consequent encroachment of that little wick there. Lower quad of that wick. So these wicks, you gotta really pay attention to these wicks, man. Look right there. Consequent encroachment, drop, lower quad. So it's working this right here. Already took those, took that low. So let's just take a peek on the 5. Just cleared. Look at that, just hovered, came down. This all looks good. Look at these equal lows right here. That looks nice. And let's just put it on a 1 minute. So you see, you start from top to bottom. Now let me put my drawings back on. A lot going on here. I know the gray area is just the weekly, like I'll click on it. it's the weekly buy side inefficiency, sell side inefficiency. So busy, and then that's yesterday's first fair value gap, which price ran through it, used it, pushed up into the end dog, the new day opening gap. So we're opening up today really, really low in a discount. So let me start setting up the opening range gap. So I'm on a 1 minute. I'm gonna need 930. So that's 930. Let me just fix that real quick. Fix the settings. Extend right, and then this is gonna be a cheap gap because price is gonna open. Like I'll show you what that means now. So we're gonna probably open somewhere like in this area here, because this is where price closed. Check this out. If you click right here, right hand side, regular trading hours, you go to regular trading hours, that is your closing price yesterday. Make sure it's on 930. Yep, 930. And put it back. Like that right there should already tell you so much. Electronic trading hours. Okay. Makes you wonder, right? They'll put it right in front of your face and people will still be like, nah, bro. Alright, so there it is. 930 open. Push this down right here. Now let's see what it's going to do. A little bit lower. So 70% strike rate that it comes back up here. So we'll watch. Doesn't happen every day. But what we're looking for is that first fair value gap. Right now it's working yesterday's first fair value gap. Remember, the first fair value gap cannot be on the 930 candle. But you want to be aware of what's going on in this area. So boom. That's what we're looking at. Price looking to boom, and then we want to put this till 10 a.m. because it's the first 30 minutes. So there's that. Now, let's see if it's going to use this as an inversion, which is yesterday's first fair value gap. See this little imbalance right here? Came up, boop. Again, I'm not looking to be right, wrong, nothing. I'm just studying. This is what I'm doing every day that the markets are open. Let me just do this real quick. I just like to see what type of time ES be on too. Like to have that. Look at that. You see? That looks beautiful right there. Reacting, coming down, swiping highs. Just like to see that. I want to see things, line up. All right. Took some sell side right there, minor sell side. Let me put this on NQ on a 15 just so we can have a higher time frame, have an idea of what happened. So look, they ran sell side. No fair value gap yet. Everything is pretty balanced. Up, down, everything is balanced. But look, they ran. Let me just put a line on it. Boom, 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 boom. And just put sell side on it. Bottom left. All right. So they took some sell side there, minor. This is primary. And this is primary. I'm just looking for that first fair value gap, and then I'll seems like right there that's where it's gonna be. Yep. Looking like it's gonna be that one. If I drop to a lower time frame, I would definitely find a fair value gap. We'll do that in a little bit. This is getting annoying. So I'm gonna just dim it. It's going there. So look, on a 15-second time frame, so there's that first fair value gap right there. It's just gonna run up there. And yep, there it is. So basically nothing there. So they used yesterday's first fair value gap to push, which is this one right here. So make it a little darker just so we can see what happened. Put it back on a 1 minute. See, as I said, came down, used it to push itself higher, and there it is. Because here's the first fair value gap of today, which would be this. Let me just boom and not extend right. That's the first one for today. 10 what? 10 3 24 first FVG. So that, just keep that there. But let's see how it used. Yo, why is this flashing like that? This shit's getting pretty enough. Boom, went right to it. 70% strike rate of it going back up there. So you see it ran the sell side and pushed up right to the midpoint of that. That is beautiful right there. That is a beautiful thing to see. And just studying that. But like, where's the entry? The entry is pretty much ran the sell side, and it just, the fact that it was hovering around that first fair value gap from yesterday, and we had such a wide open, like in a discount. Look at that, almost 130 handles. When you see that, that's where you want to like anticipate it going back up to that midpoint. And all it did was use yesterday's first fair value gap. And where's the 930? 930 came down, up, came down. Right here, that's strength right there. The fact that it's leaving this open like that, pushed up. The next candle hit the top of it and then just pushed it higher. Right to the midpoint. So obviously entry would have to been super on a super low time frame to look for an entry if the 1 minute was not going to be used. Came down, ran up, right there. That little fair value gap there. Look at the bodies of the first FVG on that higher time frame. Respected it, pushed up, hit the top, and boom, went right to the target. On a 5-second chart there. Back to a 1 minute. That's pretty cool, right? So a 5-second chart is where it was yo, I'm not gonna front. That shit flashing like that is getting pretty annoying. Let's just stop moving around and just watch. So it's working this little inefficiency. Let me just maneuver around my screen this way. So this inefficiency right here, it's working that, hit the midpoint. So we just got to see. So and look, and it went into the new day opening gap from yesterday, right at the midpoint. So those are good signs. Pulled it, and we have the new week opening gap right up here, and we have yesterday's. It's super small, but yesterday's new day opening gap is there, and you know, this is stuff that you want to be aware of. So now let's see what it does. So it's 9:38. We got news 9:45, and we got news at 10 a.m. The 9:45 shouldn't be a high impact. The red folders are the high impact. So just want to see how it behaves. But look at how in the midpoint, look at how the bodies are staying under it. That's stuff that is pointed out to us. And if I measure inside here, I bet you it'll give me some more data. Okay. Right at consequent encroachment as well, midpoint. It's respecting the the bodies. The wicks, as we've been told, do the damage. Kind of like this price action today. It's pretty sleek, pretty nice. Compared to like yesterday, it was nice, but it was just doing a lot of damage yesterday. So dropping all the way down to a 5-second chart. Because no entry was formulated, like it wasn't formed. So there we go, 940 coming up. So what normally I've seen happen right here is, here's where my mind is going. If they're going to go higher, they're not going to go higher right away. They're going to bring it lower. They'll probably come down, tap the first fair value gap, and then take it up top. But it's non-farm payroll, so anything can happen. What you expect is not what you get. So that's why it's just best to not even demo trade it. Like, just leave it alone. Come back fresh on Monday. Ooh. And honestly, I can't wait for that mentorship to finish up. So that way I can just go on like on my own, because it's a lot of information. It's a lot, and I'm sure he can keep going on and on for months if he really wanted to. But so look, it hit this little inefficiency now. There's a fair value gap there too. So it's working inside there. Ran this low. Boom, pulling up. Right back to the midpoint. And we just watch that. We just study that. You see how price is like stalling right now? It's not really sprinting to a specific direction. They like doing that because time. So look, boom, now it's above the midpoint. I'm going to start dimming this because we already know what this is. So dim that down. I don't need it all over, like all in our face. We know that it's from 9:30 to 10 a.m. And then the 9:50. I don't know if I saved that. I'm going to have to start saving that one. 9:50 a.m. And then so price is running highs. Remember, look, we got some. Look at these highs. This high right here and this one right here. So whoever's short from London, they're trailing their stops. So look, it's probably, yep, tagged it. There it is. See that? See how I tagged that? I just point, like my eye draws to that. Boom. Tagged it. Those relatively equal highs in this whole area here. This one, let me put my mouse. It's probably not. This one right here, that's what I was saying. Look at that one and that one right there. That one, that's the one I was saying. And there was an inefficiency right there. So it looks like a nice secure area. So now, whoever's like thinking this is a breakout, that's how you got to start thinking. Remember how he teaches us. So people are in there assuming it's going to go higher. So let's see what happens. I'm going to put a fib on this from the bottom to the top. So I got near the upper quad. About 9:43. We got 2 minutes till that news. And let me just peek real quick. So it's 9:45 final services PMI, and then the ISM services PMI at 10. So let's see what they do. So whoever just got in thinking it's gonna go higher, they're probably gonna just bring them down now. Let's see. And let me just peek on a higher time frame. Remember, we don't want to forget that. So look at that. Higher time frame, it's just clearing out. Boom, clearing out. Look at this inefficiency right here. That looks like a nice area for it to reach into. And it's drawing into that new day opening gap. Small, but, you know, enough to draw it. But we have to see how it reacts to those news drivers. So cool. Let me put this on 5 just to take a peek. Yeah, see that? Clear all this area here. And we got a nice little area here. I really wanted to, let me actually mark that up. So let me put the primary sell side. I'm not going to type it out. And then up here, this is Wednesday. This is a primary buy side right there. Wednesday. Yeah, we got buy side up there. All right, so there's the 9:45 reaction to that, and we're leading into the 9:50 a.m. macro. So it's 9:45, and it's leading into the 9:50 a.m. to 10:10 a.m. So 10 minutes before the hour, 10 minutes after the hour. And what we do is we just watch and see how it behaves in between that time slot. All right, so let me just copy this and put it, boom, adjust it. So in that area there, we're just gonna focus and see what they're gonna do. All right, we got the marked highs. We got a ton of things on this chart. I get it. What is all of that? Oh, that's that Tuesday low right there. Yeah, that Tuesday low. We'll keep that there. I'm gonna dim it though. That's why it's important to keep everything organized and like know what you're writing. And it shouldn't affect you, you know, like train myself to eventually just write these things on the side just like the mentor does. That's like a process in itself. But for me, it kind of doesn't bother me. It don't matter to me. There you go. So let's put that fib back up. Boom. This needs to come a little higher. So low upper quad right there. So it ran through the lower consequent encroachment, came down into this inefficiency, pushed up right here, failed to reach that upper quad. Now it's coming down, another imbalance. We're leading into the macro. So we want to see what it does. This is how I study. This is the knowledge from the mentor. Now look, boom. See this right here? All right, let's see that. hit the midpoint of that. Now let's see if now that it's like a couple minutes from the 950, let's see what happens. Remember, the wicks are doing all the work. Let me take that off. I just like to measure those wicks. So look, this is what's considered an order block. So boom, let's see if it works inside of it and pushes it down, or if it's just gonna fully fill the opening range gap. And there's no right or wrong. You're just studying. Let's see if it goes to the upper quad. All right. So yeah, like I was saying, man, once that mentorship is done, I believe is at the end of this month. Oh, can't wait for that. To go back, watch all that content, take proper notes, and continue to tape read. Because he dropped a lot of knowledge, tons of knowledge over live price action. No hindsight, which is dope, man. And I'm not here to sway anybody into his thinking or none of that. But when you really roll your sleeves up and get to it, you start to see a lot of things, and you just be like, yo, that's pretty wild. Like he says, are we supposed to know that? All right, so we're in the 9:50 a.m. to 10:10 macro. We want to see what price is going to do. Got some nice highs up here, so there's buy stops. Remember, whoever jumped in here, they thought it was going to break out, so they're probably chilling right now like, all right, we're okay. We're okay. But who's not to say that they can't send it all the way back down to this first fair value gap? I'm going to put this to 10:30 because that's how long I'm going to record for. Then I'm out. So this is a good sign right here on this fair value gap that it left the bottom of it open. So again, there's a lot of things that are like not in the normal today, this week actually, meaning manual intervention. But this I wanna get this out of here because you already know what it is. Just put opening range gap because I want to see how the lower end of it was left open right here. That's what I want to see. Let me make that. These are the signs that we're taught to look for on a normal day. See how that remained open right there? On a normal day, that's bullish. Because look, it came down into it, boom. Down into it, boom. Came out and then boom, hit the midpoint of that, boom. But we got news coming up. It already tagged the high. And usually when it hangs around like this thing likes to like plummet. And when it plummets fast. So I'll just get that out of there. Because it's spending too much time in there. We really want it to leave, as we've been taught. Leave the area. Don't just stay there. So no. We got 7 more minutes till that red folder. They're probably just gonna stall it there. And that's why it's very important to know about this Forex Factory. You don't want to just be in here and not be informed and aware and write it on your notepad on the side, like news such and such time, and high impact news, and be aware of non-farm payroll and have an understanding that it's the first week of the month. So a lot of news comes out, and then after studying it, you kind of get a feel. So finally, it hit the upper quad. There we go. You see, that's what you want to see. If these two candles would have happened right here, that would have been good just to know that it's gonna come and fill it in completely. So this is the second time I've seen this wide of a opening range where it's over 100 handles and price fills it in. It fills it in. It doesn't really not all the time, but I've just seen it happen. It was I think it was last Friday. It drifted it opened up super high and it drifted lower to fill it in. It took its time, but it did it. And right here, it opened super low, and now it ran low and then boom went up to fill it in. So obviously it didn't give it on the first fair value gap, on this time frame, on this 1 minute time frame. So look, we gotta just see what's going on. Not even here. In all actuality, if you take this right here, this SIBI price ran through it, and then if you know what you're doing, boom, boom, boom. So look, it's about to fill it in. Let's put it up. Yeah, so it seems like it wants to go to that high. So hit the midpoint of the new week opening gap. And this is yesterday's close right here. So it's filling it in. It just has a boom, a little bit more, and it's completely filled. There it is. So they filled it in the first, what's that, 26 minutes? That is a beautiful thing to see. And remember, as I stated, that right there, that staying open was good. These are all the positive signs right here. So I'm going to just do a little bit of documentation. That's a good sign right there. This is another good sign right here. It's staying open like that, coming down, boom, pushing up, coming down, boom, pushing up. I just assumed lower because it was spending time there, but these are all the data points we want to have. So I'm taking a screenshot of that. And it's inside that macro. So it came up top, fill it in. Let me zoom out, see what's going on the higher time frame. Let's hide all these drawings. I know. Trust me. They actually bring comfort to me. So this is on a 15-minute. Remember that imbalance? So it drew price up into it, filled in. So now that it's here, we'll go these relatively equal highs up here. Why not, right? Why not pop out? We gotta see what they're gonna do with this folder and look, back to regular trading, right? So they filled it in completely. That's a pretty thing to see right there. Boom, came right here, pushed up, came here, pushed up, tagged the highs, the buy stops right there. I'm going to just keep it like this. See that right there? Yeah, look at that. So price might just whop, run through that. Look how it worked right here. This right here, this low. It worked all these nice lows right here. They cleared them out. Oh man, just keep it like that. 1 minute. So remember, this was the 950 started right there, and it ran to a buy side. So that's what the macro did. Ran to buy side. Now let's see what it's gonna do once this folder drops in about 45 seconds, and then what it does at the top of that hour until 10:10 right there. So I'm not gonna put the drawings up. I'm gonna just leave it like that. I'll probably click them back on in a little bit, but just to take a quick peek. We got 20 seconds coming up. Let's see what they do with this PMI folder. Then we got another 30 minutes, and then I'm done. 10 seconds. And boom. You saw how that shit just wicked like that? That was wild. It just boop. Woo. All right, let's put the drawings back on, see what happened. Okay, you see, near that primary, that was that buy side right there. That was wow, right? That shit just said, whoop. I'm gonna open wick. That was, yeah, you don't want to be messing around with that shit.